Good day to all Inderes TV listeners and viewers. Tecnotree publishes Q1 results today, and on this video we will discuss that with the CEO Padma Ravichander and CFO Indiresh Vivekananda. Welcome.
Thank you.
Good evening, Ronnie. Welcome.
So we could start off with the traditional question of Tecnotree's highlights during the quarter of Q1.
Yes, thank you, Ronnie. Thank you for joining us today, and I'm happy to answer that question. I think the company overall maintained its momentum in driving global sales of its digital platform in Q1 of 2024. We completed many projects, including some in AI/ML and digital transformations for key customers, resulting in increase in revenue growth. The growth was primarily driven by 2 new wins in the LATAM region, while APAC and EMEA continue to remain growth markets for our digital platform. In constant currency terms, we have done really well in terms of a 30% growth in net sales, but in real terms, it was a 4.7% growth to 16.3 million euros, and compared to 15.5 million euros in Q1 of the same quarter last year. A very, very healthy operating result at 22.3% to 4.4 million euros, compared to 3.6 million in Q1 of 2023. We declared a 1 cent earnings per share overall, and we retired with a healthy order book, which increased by 10%, 10.3% to be exact, compared to the previous year at 74.8 million euros compared to Q1 of 2023 when it was at 67.8 million. So overall, I believe it achieved several notable milestones in the first quarter. We definitely solidified our position as a trusted partner for telecom service providers, especially powered by our AI/ML sensor fabric-enabled digital transformation product. We won a partnership in Jordan for a digital transformation project in the Middle East, strengthening our Middle East position. We additionally secured a new digital MVNO opportunity in Brazil, increasing our MVNO presence in global markets. And Tecnotree Moments platform this quarter won a partnership along with Global Hits to elevate the e-health services across Mexico City and then further expand into Latin American geographies. And what it will do is it will promise a digital streamlined operation across the healthcare value chain with e-healthcare services digitally integrated. It was an extremely strategic win because we have strategically been thinking of how the digital platform can go beyond connectivity to monetize other types of industry vertical capabilities on the platform. And I'm proud to say that this was a well thought out strategy by Tecnotree. This initiative by Tecnotree with Global Hits has also been recognized by the industry body TM Forum for 2024 Excellence Awards, and we have become part of the finalist panel for network monetization and adoption of the TM Forum ODA standards for B2B2X healthcare capability. So overall, it's been an excellent quarter with a healthy EBIT growth. And while we have faced exchange losses this quarter as well, but we continue to monitor that extremely carefully. A little bit about the foreign exchange. I know this is very concerning to investors. What I can say is that the world today, Ronnie, is divided into prepaid market and postpaid market. The prepaid market is where Tecnotree has gotten strong foothold in emerging markets like Africa and LATAM. And I'm talking literally 40 years of telecom experience in the prepaid markets. The postpaid markets are the emerged markets of Europe and United States, where we have now set our eyes on. And our track record in these prepaid markets are creating great momentum for subscription-based opportunities for us in the emerged markets of US and Europe. Our products, Tecnotree's products, are born in emerging markets and today are ready to create a barrier to entry in these growth markets of US and Europe. And I am personally invested in this company as I believe that this opportunity for growth is an exciting opportunity and quite unique for Tecnotree. We have a very attractive growth pipeline in these new emerged markets. And because of the strength of that, and it's mainly because of the strength that we bring to these markets at the right price point and the right product. So that's really my summation of Q1.
If looking at the numbers more specifically in Q1, I saw that there were no revenues from own or third-party licenses, and the revenues came only from deliveries and maintenance. Could you open up what was behind this?
Padma, may I take this?
Sure.
Roni, as you know that Tecnotree has a very unique seasonality in its both revenue and cash. And the revenue on license also moves in the same way. It has a highly seasonality. And as we have been talking about the way the Tecnotree's revenue and cash are highly seasonal, one way of mitigating it or normalizing it is moving towards the ARR model from our traditional, what we had earlier of license, deployment, and go-live type of revenues. So there's a conscious effort we are moving into more into an ARR model. And that is how I see even in future happening. Yes, the maintenance is considered as an ARR since they are recurring. Any revenue which is committed and comes over a period of time, we call it as a ARR. Hope that answers, Roni.
Yeah, that answers. The order backlog came slightly down from year-end level, and new orders seem to be on a rather low level in Q1. Should the investors be worried about this, or was this also due to quarterly fluctuation?
Yeah, probably I think, Padma, I can answer this as well. Roni, yes, the Q1 is typically low quarter for both my order intake and on the new orders what I get. So if we really look at it, Q1 typically, this year especially, we had a long holidays which impacted my order intake in the Q1. There were some deals which moved into the subsequent quarters. More orders were retired in this quarter than the new orders what I got. And hence the order backlog is lower compared to the previous quarter. But if you look at last year Q1, what it was substantially higher than the last year numbers. So that is how we look at it.
Could you open up your outlook on cash flows going forward into the year? You mentioned that you're expecting higher cash flows in Q2. And what about the whole rest of the year?
Again, when we look at the Tecnotree's seasonality, if you look at Q4'23, just going back to the previous quarter, we had the highest cash ever collected in the company, something like 20 million we collected. And this is a seasonality what we have. In the last year's Q1, we had a very high collections, whereas the previous year's Q4 was very low. This exactly is on account of the seasonality. Sometimes we have a very high cash collections. Next month, it normalizes or comes down below our expectation and again picks it up. Long holidays, again, is the other reason, coupled with high exchange volatility, resulted in lower SCIF collection in Q1. We expect a higher collections in the coming quarters due to the ongoing completed deliveries which we have done. I'm expecting more cash to come in the coming quarters.
Last year, you made a prepayment of 2 million euros for an M&A target. We haven't yet heard any news about this. So are you able to comment in any way your possible plans for this M&A?
Sure. Actually, this is a tech company which are aligned with the Tecnotree technologies. The source codes we have got from that company. What we do as a principle is we rationalizing our partners' products that we use in our stack. And wherever there is a strategic intent, given that the technology to strengthen our portfolio, we intend to acquire such products or such companies to reduce the total cost of ownership. In this particular case, the tech due diligence is on, and I expect to complete this in Q2.
The board of directors proposed a dividend for your AGM, and the dividend is rather small and doesn't have much economical significance. Could you open up the rationale behind this suggested dividend?
Okay, let me answer this, Indiresh, and maybe you can add your perspective to it, please.
Sure.
I feel Tecnotree over the years has focused on EBIT performance. As you can see, the last 5 years, we have shown record EBIT growth, high profitability, and a very strengthened balance sheet. The intent is to share this growth with our shareholders. As our products achieve maturity, the return on investment will grow. We honestly believe we are reaching the crossing of the chasm from initial investment phase to a mature product phase. And we believe that at this strategic time, to enable a stable dividend payout policy is the right thing to do from an investor perspective. And that's why we have taken such a decision from a business perspective.
Thank you, Padma. If I may add, Ronnie, a couple of lines in this. Yes, the current dividend is more, I call it as a symbolic, and also is a new beginning. Our aim is to maintain a stable dividend, and we want to be a dividend-paying company. That is the main intention of doing some of the cap table revisions, what we did. Again, the company will look into the capital allocation policy frequently, and anything to make this a stable dividend, that part of the work will be done on a consistent basis.
At the AGM, you presented also your updated management compensation policy. Could you open up this change and rationale behind it for the investors?
Yeah, sure, Ronnie. Let me take that question. I would say the 3 important pillars of good governance for any listed company is 1, financial stability, brand equity, and customer-centric growth. 2, employee engagement and employee career development and inclusive culture. And 3, high share owner returns and confidence. We at Tecnotree have definitely enjoyed a good growth in terms of market cap in the last 5 years. We have been recognized as a top mid-cap company by the Nordic Diversity Business Index and a game changer by the Helsinki Stock Exchange, creating a solid foundation for our turnaround story. Now it is the right time to create long-term value for Tecnotree investors, and we believe that we need to try and link our performance against this plan. So the company in 2024 will adopt a stable dividend policy, as Indiresh has already spoken about. The company will also seek to link a proportion of the top management's compensation to free cash flow, resulting in stable dividend payout. And the targets will be followed across the core management members for the calendar year 2024. We will ensure that there is a free positive cash flow post expenses, including dividend distribution. What this really means is that we are abstaining from any increases for compensation other than cost of living adjustments that are regulatory in nature. And we are pegging for the CEO and CFO 10% of our fixed pay and 20% of our bonus to maintain to delivering on the free cash flow, resulting in stable dividend payout target that we have set for ourselves for 2024. And for rest of the core management, 20% of their bonus will be also pegged for achieving the same goal. I believe this is the right thing to do at this point in time as the company is growing well and is profitable. Thank you.
All right. Thank you for your answers, and I hope you all the best for the rest of the year.
Thank you,
Thank you,
Ronnie.
Ronnie.